upside at 81, 88, 95, 6102, and 10. Pivot 74, support 70, 62, 54, 46, and 39. Upside at 81, 88, 95, 6102, and 10. All right. Let's see here. Market here, a little bit of a push to the downside here over the last few minutes. We'll see what that if that does anything for the market or not. Again, market here, nice. Well, it rallied yesterday. Well, rallied the day before. The CPI number yesterday, PPI number kind of neutral, not much. And now looks like we're just going to be kind of hanging around the 6,100 level going forward until maybe next week when they bring out the big guns and decide what they're going to do with interest rates. The market upticks here a little bit, a little resistance around the 81 area. Again, we'll see. We'll see what that does. There's going to be some rumors probably in regards to that as well. Just like on Monday, they were thinking that the CPI number was going to be bad, so they broke it, and then all of a sudden, they rotated back on Wednesday, and now we'll see what they want to do. So again, it's been very quiet. It's been very slow. You got to have to be very patient. Obviously, for those of you who've been with us every day, know what the deal is. And that's all we can do is kind of wait for an opportunity the market might give us or might not. We are out of the capacity to try to guess what the market's going to do on every kind of day.
We're going to work the old contract today.
Yeah, we're going to stick. Let's see. Good question. Yeah, today. There's still double the amount. So let's go today with these, and I'll switch it over. We'll switch over on Monday. We'll switch over on Monday to the March contract. It started a little bit. It got a little bit deeper. It should be about 50-50, and it's not. It's still, what is that, 60-40 or something, or whatever. So we'll just let it be for one more day, and then we'll switch over on Monday. That's fair. And we'll trade the D's today, and then March on Monday. And what is the difference there? It's 75 right now. It's trading at 43. 43 and 75. 68 points. Wow.
That just amazes me.
Yeah. And it keeps, but it's been consistent over the last, a year or so, right?
Yeah.
So it's not like it's something new. And we don't know what's going to happen. It just seems to be that's the way they make that change over, and whatever equation they use to go from one month to the other. I don't know. I mean, it looks good if you have a position and you're flipping it. It'll look good on your statement. You go from being long at 60.74 to 61 something, but I mean, there's got to be an adjustment there someplace. So I don't know how it works. I never was like a spread trader.
Don't you have to get out of one, then buy back into the other one?
Yeah, there is the spread. So these people they're trading the spread. The spread is, you're not trading the price, you're trading the spread.
Okay.
So you're trading, what is it? Like I said, 68.
Yeah.
It's 68 bid. It's 70 offer. So some people will try to buy 70 and something. You'll try to sell it at 68. So they're trading the spread between the difference between this month and next month.
Yeah, but they're actually not in each contract. They're just trading. Okay,
right. And but when you when you flip out of one and get into the other, you are trading at a price.
Yeah.
Right. You're going to be trading at a 60. You are trading at a price.
Yeah, if you get out of this one, you're going to get out of here, 75 area, and you're going to jump in the other one at 43?
Yeah. So what happens is that they write up the price difference. Let's say you agreed on like 68 or 65, whatever. So at the next day, or at the end of the day, or you get together with the person you made the spread trade with, and you figure out a price. It could be arbitrary, but as long as it's a 65 spread. Let's say you guys decided that 65 was your deal. That was the bid and the offer that you guys made the trade on, and so you can whatever price you put down is arbitrary as long as it's 65 points difference. You understand?
Yeah. Okay.
But David, you have to have. Usually, you're already long or short in the position, like before you take the other side of it. So I would be long the D's, and I want to be. Then you would sell the D's, and you buy the March to stay long the March. So you have to be one position. You have to have one position already fired up. That way you can stay long the contract. All right, we got 81 here. A little just bouncing around in this range.
It's interesting to see they made it down to the 56 yesterday.
Yes, that's what you were calling it for.
When they reversed it back up, I said, "Oh, they're going to take it up."
Yeah.
I left.
Yeah. Let's see here. Let's see if we have any other numbers coming out this morning. Nada. And this is it until we get unemployment. That'll be on the 18th, which will be on a Wednesday, if I'm not mistaken. Yeah, Wednesday afternoon. So Thursday we might be busy. I mean, obviously, if you're going to be trading the number, which I highly hope you don't trade you never know. It might be nothing. They cut it's all depending on what they say in the statement. But I wouldn't trade. I mean, I wouldn't trade it. It's not worth the aggravation. The volatility is too great for us to try to keep up with.
This year, Christmas is going to be on a Wednesday.
Right.
We got a full week next week. Then
we're definitely when the full week is on Wednesday, it's definitely holiday time.
Yeah. Okay. So
I mean, I would think probably
23rd's on a Monday.
Yeah. I mean, I would do. I mean, it's going to be so slow. Probably just do Monday.
Yeah.
For sure. And the following week is going to be deader than ever. So I don't know. I mean, well, definitely not Tuesday and Wednesday. I mean, Thursday and Friday. I mean, is it even worth it? I don't know.
Yeah.
And Monday for sure, and then after that, I mean, the week between Christmas and New Year's is dead.
Yeah.
I will say that probably you get back on the 2nd, which would probably be on Friday.
The 2nd's on the Thursday.
On Thursday.
Yeah.
The 2nd. But yeah, right. Christmas is on Wednesday.
Yeah. New Year's Day's on a Wednesday.
On Wednesday, right. So, yeah, so for sure, 2nd will be back on Thursday and Friday.
Okay.
So maybe next Monday that week of Christmas week, and then Thursday, Friday of New Year. After New Year's. I think that would probably be right now, tentatively, what we're thinking of. I mean, again, there's no reason to watch paint dry.
Yeah.
And if you think this is bad, it is what it is. I mean, there's nothing wrong with, understanding that there's not much happening here, and you have to, take a step back and, I mean, I remember when we would go down to the floor, we would just kind of stand around, look at each other for a half an hour because not much was trading. The market opens, not much is going on. You're waiting for somebody to do something or somebody to have an order. And then if you do buy it or sell it, you have to sit with it because it doesn't move. And then you're asking it about, you start at 7:30 and about 7:45, you're asking, all right, where's the next party? So we can get out of here and go to the next party. Well, those are fun days. That's if I even came to work those weeks.
Well, are you gonna get to stay home, or are you gonna be out visiting relatives and children?
Well, thank goodness my kids are around me, so I don't have to
Yeah.
travel far. Yeah, I mean, I'm not going anywhere. My daughter, um, hi, my daughter is due, I think, either middle of January or middle to the end of January. So I'm
That's
not
the
going
one.
anywhere.
That's the one in New York.
No, this is a daughter who already has a boy, and she's having another boy.
Oh, okay.
Yeah.
The one in New York, is she going to be down for Christmas?
She's actually coming in. Yes, she's coming in. I think that week of Christmas. She's
Good.
gonna
Tell
be
her we're
in.
still waiting on our hot tip.
Yeah. Okay. It's a new year. I'll mention that to her. We'll see how far we get.
Okay.
All right. Well, we got right up to 79, 75 there, just in case you were wondering, against our 81. Yeah. No, she was in, a couple of weeks ago for Thanksgiving, and she was in a couple. She was working, and I'm listening to their calls. Man, they're way beyond my scope of understanding. The way they start talking about these numbers that they're doing and how they do things. It's fascinating. It's cool. And all right, coming up here to our 81 area, but there's a lot of pressure, by the way.
Oh, I can only imagine.
There's a lot of pressure. They give her this like, without giving too much information, they are trying to make things a little bit more technologically efficient, and they gave her basically here's our whole business model, make it technologically efficient, and so they, they put out they put out they also tell her, okay, we have this system already that they decided that they wanted to use without asking her if they should use it or not, and the system's kind of not working efficiently, right? But the head guys above her bought into the system already, and they tell her to fix it, even though she would have never bought it to begin with.
What? Just tell her to cancel it and go back to the old one. I fixed
Right,
it.
right, exactly, right. And so she's like, they tell me to fix something that they bought, which I would have never bought to begin with, and I'm supposed to try to fix something that cost me more to fix than it is just to get rid of it,
Scrap it. Yeah.
right? And to buy a new system. This is what she has to deal with, because if she says that to somebody, she's insulting one of one of the higher bosses above her, which again, there's not too many people above her there, so it's a very difficult situation she's in.
Tell her that's what we call the plumber syndrome.
Yeah,
Payday's on Friday and crap flows downhill.
yeah. Well,
Don't be there.
so she goes, what should I do? I go, well, I mean, you have no choice. Just try to fix it without trying to be too insulting. All right, we're coming up here to the 81 level now. See what
I
we
wouldn't
want to do.
survive in their world.
Yeah, I mean, too much BS, you know. And then she's got to tell her people that she works under, you know, what to do, and if they don't do it the way she wants it, she gets all messed up, pissed off, and then she has to do the work, and it's not a good situation.
I'd have
All
just
right.
said, I'm going to quit and avoid the rush.
Yeah. Again, make sure we keep your stops in place. We're not loving any trade we put on here because it's what it is. It's the holidays. So we're up here to 81, working the 81 area. I hope we don't get these like slow rallies, right? That'll be a killer today. Well, I'm going to be here long.
That 82 has bit me several times this week. So I'm not taking you today, buddy.
Yeah, well, hope it doesn't bite me, but we'll see what happens.
Oh, you ought to get 80 out of it at least.
Yeah, I don't know. We'll see. All right, coming back down here. Again, you could scratch. You could get out of some here. Take a little bit of a profit there or scratch most of them if you did get in there. You don't like the price action against the 81 area. So give you a little bit of a, again, that's considering how slow it is. I don't care. I got some, just kept a couple here. See whatever it does, it does. If it doesn't, it's fine. I'm going to get all tangled up in the Friday no trade zone day.
I don't mind the Friday. It's just I'm in the wrong contract.
You know, yeah. I mean, again, there's still more contracts traded here on in the D's, twice as many more. So
Really surprised that we didn't get back to at least 80.
it still might. It just might get me out first. Usually the case, right?
Yep. Hey, you can dig your heels in like I do and be stupid and stay.
No, I scratch most of them when I went back down there. So sometimes you got to take what the market's giving you and get out. And I hate these slow rallies. They don't retreat at all. Hope we don't have one of those trades. I mean, okay, well, this one did. Let's hope the next one doesn't. All right, well, got up here to 84. Again, keep your stops in place. So we'll see what the next opportunity is. Our next level up there is 88. No numbers coming out this morning.
I got a question for you. During your time of learning to be a trader, did you have to go back in and reevaluate the way you were trading and change things?
Well, I will say that when we got to trading electronically, that's when I had to reevaluate and change things the most. Um, and even now, now I'm even looking. I try to not trade when I know it's the trade is trending the way I don't like it.
Yeah.
Okay, like those, like I keep saying, rally markets that I don't like. I don't like to trade the range. I always seem to get caught in the range thing. So there's a couple things that I make adjustments for according to some of the things that I have learned that don't work for me. Like I always say to everybody, find the trades that you recognize and trade. Because I can show you a lot of trades. Is that which ones do you want to take? Which one works for you? Everybody here has different ways of looking at things, the recognition of a trade on the chart. Everybody like sees something a little bit different. Not everybody has to see it the same way. So consequently, those are a couple things that I try to make adjustments to that I don't like to trade. Like this kind of like slow rally trade doesn't fit my uh, what I like to do the most. As far as when I was on the floor, I will say that when I started, and you're not there's a different kind of trade when you're scalping um, on the floor, because when you're scalping on the floor and there was no electronic trading, you're getting bids, you're bidding and offering at a certain price. You are the market, right? As a trader, and the broker, you're making a market for the broker, and the broker will either sell it to you at the price that you wanted, or he'll buy it from you at the price that you're offering. We don't have choices here on the screen. Pretty much you have to step out and buy or sell because the markets are moving according to what the market is. It was the opposite when you were trading. When you were trading, you made the market, and the broker hit you. You were the one that that got trade. You They traded with you. It's completely the opposite when you're looking at electronic trading, because you're at the mercy of the market moving, and you have to put in an order, and the order is there. And then if you get filled or not, or if you want to jump in and buy something or sell something, you have to jump in and just do it. Um, so there was a difference in that kind of trade. So when I was beginning, I would kind of look at the market. I was kind of seeing what the market was doing as we come back down to our blue band. If you're a little aggressive, maybe you're jumping in against the blue band here, make a little bit of money back against that. Like I said, it got me out, and then I had to get in here at the blue band, my money back here a little bit on that 80, 81 trade that I made. But it did get down to 80, just like I said, after I got out. But then I did. The reason I got back in at the 80 area was because of the blue band. It's not like I just jumped in there because Don said it should go back to 80. But I bought it because of the blue band. All right. Anyway, so when you're starting here, you're kind of looking at. I mean, you don't even realize when you're starting what's happening, and then eventually you start to get a feel for the market, and you get a feel for what's going on around you. Now, when you start, you're not standing next to a broker, right? You're standing, a couple steps down. And so by the time, years go by, and the more size you trade, then you get to stand a little bit closer to the broker, and you make markets, and the broker hits you because you're trading with him more. So at the beginning, yeah, I just kind of looked at the market and just kind of tried to go with where I was at the time. I didn't get hit by any broker because I was new. And then, but as time went on, you slowly move up, and then people trade with you more. They know you more. They know how much you can trade, so they're able to hit you on stuff. Hit you on stuff means that I'm bidding and I'm offering, and they're gonna say sold to me because I wanted them, or I was bidding and offering, and they have an order, right? So when you get then finally when you get to the point where you're standing next to the broker,
There.
you're basically, what you're doing is you're just facilitating his order book. So if he has buys and sells, he's going to just do them with you. And obviously, when it's a trendy market and everybody's selling, including the broker, you're going to get hurt a little bit because everybody's doing the same thing, and you have to, again, kind of step out of it a little bit and you get that position going the right way, or just kind of take what he gives you and get out of it, whether you scratch it or whether you take a loss because the market is trending and everybody's orders are going one way. But you never know when you get that one order, even though it's going one way. You never know when you get that one order that the market stops and reverts, and you're sitting there, with you bought the low to move, and you're just kind of riding it back up. And you make up a lot of money that you lost initially. But again, so those were adjustments you had to make depending on where you stood on the floor in the pit as we continued to down. I don't know if they all make sense to anybody, but it was a totally different mindset and how you traded than trading electronically where I'm looking at charts. I never looked at a chart until I went up to my office and started trading from my office because there's no reason to. I just
Well,
traded with the
let me
market was
ask you
going.
this: how was that when you first went up there and you had charts to look at? Was that kind of like, oh, now I see where it's going?
Yeah, well, no, I mean, I did have a couple of my trading friends were chartists, and so it's not like I had no idea how to read a chart or how to trade a chart. So I was learning always. I knew what it meant. I knew everything was supposed to be. I had levels when I was standing on the floor in the pit. I had my a card that gave me levels where I would have support and resistance. So it's not like I didn't understand it. Um, I just when you're in the midst of a trading, you're not thinking about the level right away. Here, when I'm trading because I don't have anything else on, I'm waiting for a level to get triggered, and so I'm waiting for the trade to happen. When I'm trading, when even though I have levels on the floor, when the markets are moving around, you're not thinking of the levels. You're just thinking of the position you have, and if the market's going up and going down, are you on the right side of it? And so you're not thinking as now. I just think about levels because it is what it is. So my transition to getting off the floor to trade electronically was I had to start thinking of levels and then to wait for them. Where I never did that before, I would be in and out like it was. I mean, even when I first started, I was trading in and out. I was trading the Nasdaq actually, which remember, you got to remember when I first started trading, the markets weren't moving as fluidly as they are now. So, I was trading the Nasdaq, and I'd have a position. Like every 2 seconds, my position, I would have orders in there. I mean, I would trade like 2,000 contracts, 2,000 Dow contracts in a day because I just did the same thing, and then after a while, I wasn't making any money. And well. Remember, I'm not losing money because my commissions were very small. I mean, I wasn't trading 2,000 contracts and paying $4 a contract. That was not the case um, at the time. I was probably trading it for a dime or something like that. So it was a whole totally different. So when I had to start the new year and I had to restart my how much I started paying for my commissions, and it goes back to even if my full commissions were $2, and that was a lot for me because I traded so much, and until I usually and you get to $25,000 and you max out, and then it goes from $2 a contract, it goes down to like a dime a contract, and then if you get to $50,000, it goes to a nickel a contract or something like that. So I basically be trading for free, and so that was nice. Usually I get to $25,000 in commissions by it was always like Valentine's Day was always like the goal. See if I get to $25,000 on commissions, and then you're starting. Then that's when you really make money because you're paying off the commissions for the first month and 6 7 weeks, and then you can start making some money. Even though I'd go from $25,000 and then you was trading at a dime, I still paid almost $100,000 in commissions in a year. It's a lot of contracts. So think about how if I'm paying a dime a contract.
Let
All
me
right, we
ask you.
went. Yeah, went down to the pivot there. For those of you who are pivot players, Then right down to our pivot area there. So another way to recoup some of those losses there against the 81 if you were a little aggressive. And again, there's a couple trades that I like to do. Pivot is one of them. Blue band is the other one. Uh, Levels. Mondays, the numbers will be for the March contract, correct?
Question for you. Do you have a time of the year that you like to trade because you just like that time of the year, the way the market performs?
No, I
No.
don't. I don't. I don't. I don't know when it's going to be busy.
Yeah.
We don't. We never know. You know. You just never know.
And Trump's not tweeting like he used to.
No, well, he's got he's president now, or acting will be president, so he has to, you know, be a little bit more careful about what he says. Can't be. When every time he says something now, it becomes policy almost. You know, you can't you can't he can't say something now and doesn't before he was a citizen. He can say whatever he wanted, but now if he says something, it could be policy. And so even though he might be quote unquote joking or whatever, however he sarcastic or whatever you want to say he is sometimes when he says stuff that you know you can't say that stuff anymore because he could act on whatever he says, and so that's anything that he says now the market could react to it like right away. So he has to be careful as to especially if he says something about tariffs or says something about trade or says something about the border or anything. Right now, all he's saying is stuff about who he's going to put in his cabinet, which again, it is policy, but it's not going to affect the market right away. Then you've got to look at the people he puts in there and how that's going to affect the market. So you have that stuff going for you. But no, he can't. It's got to be. He's got to have a different mindset now. The market will react to tweets. They always have, especially if you're president of the United States. So he has to be a little bit mindful of that. All right, we're coming down here. Support here at the 70 area. Quickly coming down here to 70. I couldn't do that when I was in at 81. Yeah.
But don't feel bad. I didn't take the 82 either.
Oh yeah. Well, it's all right. I got it back on the rotation there from my pivot there, so it's okay. All right, 80. Got here at 71, trying to give us a little bit of a pop back up here. If you got in there at 71, obviously we didn't get to 70. All right, nice little pop back up here against the 70 area. Got down to 71, 70, 75. So you got filled at 71 if you did jump in. We're on the same bar, so and this was also the blue or green band um, in our 5 minute, and I can't tell what price it was in our blue band in our hourly. It could be right there. I can't really tell. Can't tell. Prices are on top of each other there. All right, so the 70 area again. So if you lost a little bit of money on the first 81, you had a couple of chances there to get it back. You definitely had a chance here at 70 to get it back if you didn't trade the other levels. So if you didn't trade the other price action trade, the pivot and or the blue band. All right, coming back up here to the pivot.
I don't know what it is about Mondays and Fridays. I just don't have a feel for the market.
Yeah, could be a head thing.
Yeah.
You gotta tell yourself that. You know what I'm saying? Again, I just don't. I don't look at it at each day. I'm just looking at it as markets are moving around. I know. Time of the year is bad. Like right now, I mean, I mean, I have to admit that December started, and I can't believe how much they've sucked out some of the volatility already.
Yeah, we throw December in there and we throw rollover time in there. And
Yeah, and this year, you know, with the new president coming in, there's going to be some activity because he's going to make, you know, definitely going different direction, and you know, the things are going to be different. All right, we're on the same bar, so if you have the 70 here, it's still okay unless we close this bar, and then you might have to do the 69 if you're going to be a little bit more risk averse. But I mean, definitely trade a little bit smaller, only simply because we did hit the 71 and we didn't have a nice rotation against it. So the 70 is a little bit more tenuous, depending on your aggressiveness here. But we are still on the same bar. Still didn't get to 70. Now we're on a different bar here. So be careful there if you have 70. And even 69 there, be a little bit, traded very small. Again, you just got to make adjustments based on the price action. We are trying to take advantage of ebbs and flows of the market and looking at the levels in addition to price action trades. I'm going to shoot both of those gives us our setups. We talked about the pivot rotation, talked about the uh, blue band rotation. We talk about our levels. There are other price action trades that occur, but they have to occur um, after the market creates those opportunities. And again, we don't know what they are because the market's going to create the trades after the trade happens. All right, so like I said, be careful here at 70. If you're going to take it, you're very, very aggressive. Otherwise, look for 69, and that's being aggressive too. If you're more risk averse, you're looking at the 62 area. All right, now we're down to, again, like I said, the 70 is more a lot tenuous, and we're very aggressive there to even take the 69 because of the reasons, because of the price action. If you're, like I said, traded very, very small if you're going to trade it at all. Otherwise, look for 62. And as we continue to slowly downtick here. All right, continue to downtick here a little bit. Looking at the 62 area. All right, quickly rotating down. We can add the 62 area next. Again, not surprising. Just take not surprising that we got to 71 and then the 70 just did not wasn't going to work. Only because I guess we missed it by a point, right? Technically. So, but didn't mean that the level didn't work. It just means I don't know how you have to look at the price action and make those adjustments. So we're trading the D's contract today, and on Monday when we get back, we will trade the March contract. If anybody has any questions, feel free to ask in the chat. Oh, we got down to 64 and change here. All right, so in regards to like what I said earlier, in regards to Trump saying stuff or tweeting stuff, so as Wall Street expects less regulation under President-elect Donald Trump, his transition team is reportedly exploring ways to shrink, consolidate, or even eliminate top banking regulators. Elimination of any agency would require congressional approval, and it may not be as easy to find support for such a drastic step in slashing government oversight. In an interview with candidates to lead the bank regulatory agencies, Trump advisors asked whether the Federal Deposit Insurance Corporation could be abolished. People familiar with the matter told the Wall Street Journal that advisors, which include officials in the newly formed Department of Government Efficiency, Dodge, Doge, Doge, that one that Elon is running, also asked the candidates if deposit insurance could be absorbed into the Treasury Department once the FDIC is dismantled. The interview with candidates who were under consideration for the FDIC and the Office of Controller of the Currency also involved discussions about potentially consolidating or restructuring the FDIC, OCC, and the Federal Reserve. Another plan that was floated involves only one agency, the FDIC, OCC, and part of the Fed regulating banks. Elon Musk, who co-leads Doge, last month called for elimination of the Consumer Financial Protection Bureau, just said which just hit banks with a cap on overdraft fees. At a recent event, J.P. Morgan's CEO Jamie Dimon said the bank industry is hopeful for less red tape under Trump because they've had successful years of regulations, a lot of which stymied credit. And all of this stuff seems to help further lifting bank stocks. echoing the post 2016 election that was driven by expectation of higher earnings and deregulations rather than actual change. So you can see here, he has to, when he's talking about stuff on his tweets, if he says something related to any of this stuff, it's going to affect the market. Obviously, going to affect bank stocks. But he could say it about any industry, and it's going to affect that industry. So he has to be a little bit careful in regards to what and how he says things now that he is, president-elect and or going to be president. And once he starts doing that, then that's going to affect the market. And so you don't want. I mean, you're going to get volatility if he starts doing it, especially during market hours. You're going to get craziness. Who wants craziness? So welcome to the new folks that are here. We are trading mini S&Ps. We're looking to take advantage of ebbs and flows of the market based on the levels we gave out this morning. And if we can repeat the levels in the chat, you'll see them. They're there to kind of guide us through the day. And those are used as areas of inflection that create opportunity for us to scalp. We're looking for 2 to 3 points right now on some of these trades. We're also looking at price action trades in addition to the levels. The combination of both of those gives us our setups for this morning. We focus on the morning hours to give us those opportunities. We average about 4 to 5 trades a day. And so we like to kind of focus in on. We try not to over trade because we don't like to give money to those mean brokerage houses. I have my issues with them. That's all I can say. Not that none of them. Some of them are very nice to me, but just, well, I guess they have a business to run. And then you have the exchange who keeps raising fees, which is also freaking annoying. But they're doing okay. So it's for them, but the people own their stock, they're doing okay. All right, that's what we do here on an everyday basis. So welcome if you're new. If you have any questions, get in the chat, ask away, especially when it's slow. You can see our next support level we have on the downside is down at the 62 area. We kind of we got down to 70. Again, I like to scale in around the level, so I'm scaling in a point above and below the area. And we got down to 71. Was able to make some money on that. And then we said that the 71 bid might be a little bit more tenuous because of the way the market traded. And so you have to look at the price action to determine whether you should take the 70 or not. And I suggested that maybe you shouldn't because of the price action. Kind of ran through, got down to 64 and change. Missing my entry point at 63 by just that much. Yield on the 10s. Again, the yield treasury market is definitely having a little bit of an issue here. Continue to downtick. 4.35 is the yield right now on the 10s. They were, it wasn't long ago. They rallied very nicely, and I was talking to the bonds that were yielding 4.15 after going down to 470 or something like that. They were all over the place. And very trendy market, very hard to scalp that market. I wish I could say we could trade bonds, but you can see it's just a trendy market. It goes up, goes down, no ebbs and flows, not enough for us to look at longs and shorts. It seems that it's one way. Sometimes you get this is just like I said earlier about what markets I don't like to trade, and I don't like to trade those slow rally markets. Well, these are slow markets one way or the other, whether they be rally or they're breaking. And so they're very difficult to trade when they're slow and they're not moving around. At least the S&Ps Get a rally where oil get some rally back, give us an opportunity. It's tradable, gives us I don't know, ebbs and flows, which we don't which we don't get so much in the bond market. Like I said, I traded in the bond market, so for me to say let's not trade the bond market is kind of annoying, but it is what it is. So we have been in this like slow mode lately, only simply because the market is in slow motion, and we can only trade what the market gives us. We do not create the volatility; we only trade it. Obviously, sometimes the volatility is greater, and sometimes it's not so much. So we need to be patient with it. All right, now we're coming back down here to the 60. What do we have? 62. We'll get down here to 64 and change again. Um, Again, if you're still got 62, still doable. And we're testing these lows here. Okay, so we have to be a little careful there against 63 only because of the price action here. A nice little double bottom there. So be a little bit careful there at 63. If you're going to take the 63 area, don't like the price action there. But again, trade it smaller. But 62, let's still keep that in there and just keep your stops in place if you're scaling. Anybody have any questions? Feel free to ask in the chat. I'm being stubborn down in here. Doesn't want to cut through. So again, 63 only if you're aggressive. Otherwise, look for a 62 if we decide if it decides to punch through here a little. It's trying to decide. It doesn't know what it wants to do. No other numbers coming out today. Yeah, again, we're just kind of hanging here on these lows, trying to see if it wants to go through or not. We got a little bit of support right under it, so maybe a little bit careful there. All right, finally starting to down tick here a little again. See how this plays itself out. Be a little bit careful there, like I said, around 63 because of the price action. Just trade a little bit smaller if you're going to trade at all, but 62 will still be doable. Let's see if that wants to get down there or not. All right, 63. If you did jump in, trying to give us a little bit of rotation here. Again, you have to be a little bit careful because of the price action. Just traded smaller, like I said, and take what the market gives us here, keeping the 62 in place though. And whatever situation you're trading, you're always going to keep your stops in place. That's a given. So we're not going to love any trade we put on, especially these days. We did go down to that 63, and it bounced back up here. So again, if you kept it small, probably did okay. Take a little bit of this rotation here. And it did not get down to 62. Now you have to be a little bit more careful around 62. I mean, we just have the, yeah, again, we are at the mercy of all of the price action. So I wish I could say that every trade is going to be laid out the way it has to be traded. It's not. You have to look at the price action and kind of help you determine to make those adjustments to your position. Maybe trade it smaller. Maybe make an adjustment to the entry point. Those are all things that you have to consider. Anything I talk about in regards to anything I'm saying is taught in our education course that we offer to help you understand the methodology a little bit better, especially since you're not going to be around all the time. And the goal of the course is for you to be able to do all of this stuff on your own. All right, you can see here we got down to the 63 area against our 62, and a nice little rotation here off of that. So now if we come back here to 62, again, got to be a little bit careful because technically the level is kind of the same thing with the 70 area. 71 worked, so the 70 area became a little bit more tenuous. If you're going to do anything, maybe you just take the bottom end of that, which would be 61. Try that, or be just trade it smaller in case it doesn't hold. Again, we are always at the mercy of the price action to help us with our entry points and how we manage those and how you trade them, how many contracts you trade. You have to make those adjustments according to if it becomes a little bit more risky. So how do you manage risk? You either don't trade it, and or you lessen the number of contracts you're trading, and or you take a little bit less out of the expectation of the trade. Those are all things you have to consider when you're trading. If you have any questions, feel free to ask in the chat. There are the levels in the chat for us again. As we come back down here to these interim lows, we've got 62, but remember the 63 worked, so make that adjustment accordingly. Still use it, but trade it smaller. It's kind of a little bit riskier because of the price action. coming down here to these interim lows again. Again, you can see how the ranges have really tightened up here as well. So. Okay, we're trying to teasings here. And yeah, again, this is how the market gets. It gets low like this, and then they just, just doesn't move much. All right, now we're slowly drifting here down to the 62 area. So let's keep that in mind. But it's a little riskier. Like I said, going to be aggressive, maybe do 62, 61, but small. But if you're going to be more risk averse, you're doing 61. Again, just keep your stops in place no matter what. I'm just kind of hanging around the 62, working the 62 area here. If you're a little aggressive, did not get down to 61. It's kind of hanging around the 62 here. See what it wants to do. Again, this is a trade that like I said earlier, it's not my favorite trade, but this is what we have. All right, there it is. That pushed through to 61. Like I said, not surprised. Keep your stops in place. Did mention it's a lot riskier because of the price action prior to that. So if you did take it, make sure you keep your stops in place. Our 62 is our next support level. Not surprising that it kind of flushed through there a little bit. Okay, coming now. Right down there to 55 against our 54. That was quick, right? Again, you never know when the volatility is going to get infused into the market. Just never know. All the way down to 51.75 there. All of a sudden, got all this energy. And at least we got filled. It got back up to 56 change there. So there was a quick rise rotation there against the 54 area. I know if you had a 2 point stop, you obviously got filled, but I got filled there at the 53 as well. And then had a nice little pop back up there at 56. You have to be fast and quick. Just never know when this volatility is going to come to the market. And we did mention that it is getting a little risky there. But nice little rotation there against our 54. And popped it right up to 56 and change up there. To be a little bit quick, hopefully your orders were in place. Now we got a little bit more pressure here. 46, the next downside. Just never know when they're going to infuse volatility into the market. You just got to trade it when it gets there. You know, it's kind of tough sometimes. 46 area next, as you can see. That's our next support level. All right. All right. I don't know. Like I said, they probably hit the stops there below, pushed it all the way down here. We got our next support level down here at the 46 area. All right. Market staying on these lows. They did flush it down. They did hit the stops. Again, we we were a little bit tentative or a little bit cautious around the 62 for the reasons we talked about. It kind of did the same thing it did at 70. We got up to the upper end of our range, gave us the profit there, and then once it hit our level, kind of ran through. That's why we have to watch the price action and adjust accordingly. Um, Nice trade there, Michael. As far as me trading the bonds, I don't trade the bonds anymore. Unfortunately, I want to, would love to, and if I did, I'd trade the futures. I mean, definitely, there's a thing to be said about what you just said because it's definitely a longer term trade now than it is scalping. So the problem with the options, though, is that the spread to get in, as far as the bids and the offers are concerned, are so large that you need a major move in the market to be able to even get your money to get back to even because of the spread between the bids and the offers. So I don't like to trade the options for that reason, and I don't like to trade the futures because the market is trendy and trades one way. But I would, yeah, again, like I said, I would love to trade the bonds only because that's where I started. But it was a different trade, so I can't, it is what it is. All right, market popping back up. We thought maybe we could get down. Well, it would have been a gift to get down to 46 on that move too. I got down to 49 and a quarter there, and coming back up here. A little resistance right now would be around the 66 area.
Hey,
Yes.
I just sent you an email
Okay.
and it's got a link for the PC checkup for you.
Oh, okay.
You just scroll down there and you'll have to download their little thing, but that's no big deal. It'll check your computer for you.
Okay, great. Thank you. I appreciate it.
No
I just
problem.
got it. Got it. Thank you. I gotta read that. There's too much to read right now. I'm afraid if I click something, I don't know what I'm clicking. I better just read it later slowly. All right. So now we're both. Well, let's see, we've got a little volatility here. Market down to the lows again. A little support down at 46. All right. Again, coming back here, testing the lows. See where we want to go from here. 46 is our next support level. Okay. Hanging against these interim lows, and I don't think they're doing the same thing as they did up there with the 62, 63 area. Okay, we're trying. Again, keep your stops in place. Of course, gets down to 47.75. That's kind of annoying. Well, 1 at 47 is our first entry point. Got down to 47.75. Getting some volatility here, so be careful. All right, we're getting a little chop here. Be careful there at 47, only because we got down there to 47.75. And all of a sudden, we got the volatility in the market. We seem to be missing our entry points by a point here today. You know what? That's going to happen. We're not perfect. All right, well, let me give you some levels here below the 39 in case the market decides to. I'm going to take off to the downside. We've got 28, 18, 10, and 6,000 even. So below, our next level below the 46 here is 39. Below that, we've got 28, 18, 10, and 6,000. Right now, we got resistance around the 66 area in case we get up there. There are the additional support levels on the downside in case the market decides to get a little bit crazy. We try to focus more on the morning hours to give us our opportunities. So we're coming here to the end of our morning session. So we have to be a little bit careful. I think that the dynamics do change as the day goes on. And for the time being, we've got some volatility, but if they decide to, uh, stop here, I mean, it is Friday, so they could be doing some stuff. I don't know. But I would use the levels versus trying to, I don't know where we got this volatility all of a sudden. Again, somebody must have said something. It happened it happened on Monday when they were thinking about the CPI numbers, and somebody said, "Oh, it's going to be bad for the market." And so, you know, anybody could say something, create some volatility, but you can use the levels all day long, especially like I said, once the morning session ends here, the dynamics do change, especially as the day goes on. So you have to be a little bit careful here. So we're going to trade. Keep your stops in place. Coming down here to the 46 area now. And well, we got down to 47 this time, and only 68 contracts traded there. All right. Well, now we're trying to get down to the 46. Again, make sure you keep your stops in place. All right, down here at the 46 area now. Keeping your stops in place. Let's not get carried away. I don't know. We got some extra volatility in the market, so take it for what it's worth. And I said we made the adjustment there against 47 because of the way the price action was. I'm not going to love any trade we put on, so keep that in mind when you're trading. All right, there we go. Nice little pop back up there against our 46. They did not get 45, unfortunately. Looking for that too, but well, can't complain. All right. All right, nice little rotation there. If you want to try to stay long, again, appreciate the fact that the market is giving us some volatility. We need the volatility for us to make money, right? I mean, even though it's scary, even though markets are moving fast all of a sudden, but all of a sudden, it goes down to an area that we feel that we have a chance. So be careful there against the 45 if you have the 45 in there. The VIX trading at 14. I'm surprised. I mean, it was 13 this morning. Wow, that's pretty impressive, actually. Nice job there, Michael. All right, we continue to have some pressure on this market. If you're trading at 45, maybe you jumped in there depending on how early you got in. But again, you made money on the 46, so you're good to go. And next, we'll give you additional levels. You can see there in the chat. Those are the additional levels. There's the rotation there off the 45 if you were able to get those. Again, if anybody has any questions, feel free to ask in the chat. Right now, we got a resistance around the 66 area. Before that, 56, depending on your aggressiveness of wanting to trade. You got the levels. You see the levels there, the additional levels that we have in the chat that we gave you. We have 39 next, and then we gave you additional levels just in case the market decides to continue to hiccup. But again, we need the volatility for us to give us opportunity. And all we can ask for as traders is opportunity more than anything else. And then always make sure you keep your stops in place. If anybody has any questions, feel free to ask in the chat. We're coming here to the end of our morning session, so we have the levels there in the chat for you. If you have any questions, put them in the chat or ask and get back. And everybody have a great weekend. Enjoy the weekend, and remember, Fed going to decide on Wednesday. Might be again. You're going to have a lot of people talking about what the Fed's going to do or not going to do, and it's going to create some volatility here. Obviously, you can see. So nervousness in the market that's going to happen. Maybe we'll get some opportunity there. But once they decide, and once we get through Thursday and Friday of next week, again, like I said, probably Monday we'll trade, and then probably not the rest of the week, and then probably get back on Thursday and Friday afternoon. But that's tentative. Just it is what it is. It's going to be very, very, very quiet. Again, unless there's a geopolitical situation or something that happens, who knows in this world. It's all crazy. All right. Any questions? Put them in the chat. But have a great weekend. We'll get back in a bit.
At least 50.